This is the very issue or issues like it that President Biden was speaking of today. It really just highlights how these two different men are trying to characterize the events that have happened since the 2020 election, January 6th and beyond.
You know, that's right. And fits into both campaign messages, really, at this point. I mean, Trump with a lot of court cases swirling, wanting to kind of keep that front and center, play, you know, the sort of victim in the spotlight. He's got that going on, of course, is getting his wish to have the Supreme Court take this up. While at the same time, you heard the president just now, and he's been ramping up this threat to democracy theme in fundraisers and in campaign events, and will continue to do that as he pushes on something that he thinks he can win over not just his base and Democrats, but some moderate Republicans, some independents who are concerned about the rhetoric that's coming from former President Trump.
And especially with these legal issues and the Supreme Court arguments going to be very much in the news for probably the duration of not just this primary election season, but into the general as well. Can we expect that Biden is going to talk more about the idea of democracy and democratic ideals than any other issue, be them kitchen table issues or not?
I think you'll see that, you know, going head to head with Bidenomics, maybe, and in terms of messaging, and we can hear from the officials on how they might see prioritizing each of those. I think the common line that the White House has had, is specifically on these court cases, though, is that let's let it play out in the courts. Let's let the Supreme Court do their job to the extent that they want to take up these cases. Biden has said there is no doubt that Trump is an insurrectionist, but he didn't want to go any further than that in terms of what the court should do in this ruling and others.
Well, as you say, it really is going to be a balance of talking about these sort of things and also talking about Bidenomics, which Enda, theoretically, the idea of Bidenomics received a boost today in the jobs report, an upside surprise on payrolls, an upside surprise on wages, a downside surprise on the unemployment rate, so a good kind of downside surprise. And yet we see consistently Biden struggles to get credit for it with American voters. Can we expect that this data or any data to come may change that?
Well, the jobs numbers today were very good, like you mentioned, Kailey. Some details were showing maybe some softening. For example, the participation rate was coming off. That means people are giving up looking for jobs for one reason or another. But despite the fact that it confirms the economy is in good order and that the jobs market is still in good order, like you say, the opinion polls aren't giving President Biden much credit for that at all. And in fact, we know that former President Trump is gunning hard on the economy as one of his main issues. He keeps talking about the need to fix trade, for example, and he says he's going to rebuild the economy in several of his statements. So the economy will be front and centre in the election campaign. On paper, you would say surely that will favour the incumbent because the jobs market's strong and things are going well, but he's not getting credit for it, and we're probably heading into the part of the cycle now where things will continue to maybe slow and soften from here. It doesn't have to be a recession, but some slowing is expected from here.
Well, and the question is, does it slow to an extent that the Federal Reserve decides it's time to cut rates? Because theoretically, borrowing costs moving lower is something that could help the incumbent president politically. But have we learned anything about the likelihood of the Fed actually starting that in the more immediate term? Does this data make an earlier cut less likely?
Well, this is the good news being bad news side of it. I mean, they're good jobs data. That's great for the country. But, of course, it probably does mean the Fed won't be in a hurry to bring down interest rates. And as you mentioned, the wages actually increased over the month of December, heading in the wrong direction for the Fed wanted to be. So it kind of cements the idea that the Fed will be rushing to bring down rates, perhaps in the first half of the year anyway. But, you know, the second half of the year could be a different story. Our own Anna Wong, for example, at Bloomberg Economics, making the point there is softness in the jobs data. It does point to cooling. So in a few months from now, the Fed could be in a different place.
Well, and the idea that there are soft parts or at least risks out there was something actually that former U.S. Treasury Secretary Larry Summers talked about on Bloomberg television earlier today. Take a listen.
As of right now, the economy looks pretty strong and inflation looks relatively under control. But there's a lot going on underneath the surface, and there are still substantial risks.
And risks to inflation specifically, Enda, how many are there happening in the Red Sea right now as we look at potentially concerns around energy, but also just transit because so many vessels are not going through that waterway?
The Red Sea is a clear risk to trade. We're already hearing about major shipping companies diverting that part of the world and going around the Cape of Good Hope or at the bottom of Africa instead. That means shipping will be more expensive, and it does, of course, mean that those prices might be passed on to people buying the goods. The difference, though, is that broadly speaking, global merchandise trade is in a bit of a slump. There's plenty of capacity with ships and trucks and rail freight around the world. So unlike a few years ago when Michelle and I were out in Asia covering the great supply chain crunch, this time the crunch isn't as bad, so there is spare capacity there. But if that starts to change, if ships are not able to meet the orders and the capacity starts building up with these freight trains and things, then you will see much more of a bigger crunch on the global supply chain. But I think right here, right now, sure, it's a negative, but it's not the threat it would have posed, say, back a few years ago during that peak supply chain crunch.
So that's as of now. But as always, when we're talking about this region, there is potentially the risk of escalation, especially given the developments we saw this week. This has very much been on the minds of many, including Carmel Arbit of the Atlantic Council. I spoke with her about the risks of this widening into something broader this week on Balance of Power.
Each individual event that takes place brings us closer to what could be potentially a regional war. Each of these events is essentially tinder in this fire. And so we are just kind of watching and continuing to monitor to see if Iran and its proxies are going to escalate further.
And of course, Michelle, now we have Secretary of State Antony Blinken in the region once again, trying to continue perhaps diplomatic efforts to keep the temperature down. But are we seeing any changing in the tone, in the tenor, in the sternness of the administration? Any sign potentially they could get more aggressive in this?
I mean, I think it's very difficult right now, and it's a painstaking effort on the part of the U.S. officials to kind of separate some of these conflicts. The Red Sea is not a part, in their view, of the Israel-Hamas war, even though the Houthis are supposedly tackling these ships that they say are, supporting Israel. That is being knocked down by U.S. officials. These are, many of the ships and the targets that they're taking on have nothing to do with the Israel-Hamas conflict, as they say. So they're trying to separate and keep separate a lot of these things that are going on all at once, which is becoming increasingly difficult as they're being linked by the motives of some of these actors.